Are you an NFT seller or artist? If so, you may be surprised to learn that sales taxes applies to your NFT sales. The problem is most NFT sellers aren't aware of this, and almost all of them are not properly collecting and remitting their sales taxes. This can cause many issues for your company, legal issues, tax issues, as well as reputational issues. In this video, we're going to go over in detail the risks to non-compliance related to NFT sales taxes. What are sales taxes? Sales taxes are a tax that's applied at the point of sale on goods and services that's charged by the seller, that's usually quoted in terms of a percentage of the sales price. The sales tax rate can vary from state to state, and the goods and services that sales taxes apply to can also vary from state to state and jurisdiction. NFT sales taxes are no exception to this. This is one of the newest areas of sales tax that states are focusing on. So there's a lot of variability in the tax rules from state to state. I have many other videos that go over the intricacies of state sales taxes on a state-by-state basis. So what are some of the penalties and financial consequences associated with non-compliance with NFT sales taxes? Number one is potential cash flow issues. If you're not properly collecting the sales taxes up front at the point of sale from your customers, and the state potentially comes after you to pursue remittance for those sales taxes, you're not going to have them, and it's going to come out of your bottom line. This can significantly hurt your company's cash flow when you're going to have to pay unexpected tax liabilities to the state that you should have been collecting from customers. So number one is just the tax liabilities themselves can cause cash flow burdens to your company if you're not properly collecting these from customers at the point of sale, and then of course remitting them to the state subsequently based off of your filing requirements. In addition to just the surprise tax that you may owe, if you are not compliant, there's additional fees and penalties that you may have to pay. Number one is you may have to pay a collection fee to the state due to your non-compliance. In addition to a collection fee, you may also have to pay penalties and interest on top of the taxes that you owe. So this can just further compound the cash flow issues and the financial impact of failing to collect and remit your sales taxes properly. NFT sellers that are non-compliant with state sales tax collection and remittance may also owe back taxes to the states. That's because we've seen multiple states state that sales taxes on NFTs will apply retroactively. This includes states such as Pennsylvania and Washington, among others. What this means that if you've sold an NFT over the last 6-year period in previous years, the states can still pursue collection for those back taxes. And the reason why this is the case is because the sales tax rules that apply to NFTs aren't new tax laws that the states are issuing. They're interpretations of existing sales tax rules that are now being applied to NFTs, which are a new asset class and a new transaction type and way that customers are interacting. So, these are the way that the state is going to look at this is that these are existing rules that they're just applying to a new type of asset. Therefore, in previous years, you should have been in compliance. So states can pursue, in many instances, going after back taxes. Additionally, if you're not properly collecting and remitting sales taxes on behalf of your customers, they technically should be paying their share of those sales taxes for their purchases as a use tax on their tax return. If they're not properly filing this and remitting those taxes, their level of audit risk can also be raised because they're non-compliant. And this can lead to them having to pay back taxes out of their pocket, which of course, if they have to do this as a result of your company's lack of proactiveness in your compliance, your customers will not be happy as well. So, the retroactive nature to the taxation of NFTs for sales tax purposes can hurt your company's cash flow in a very large way because they can pursue back up to 6 years. And if this doesn't impact your company, it may still impact your customers in the form of use taxes. NFT businesses not complying with sales tax regulations may not only face legal and financial consequences, but they may also damage their reputation in a very serious way. If customers start to realize that you're not meeting your tax obligations, and moreover, if some of these customers are negatively impacted on their own taxes due to the fact that you're not handling your sales tax obligations, this is going to hurt your company's reputation with your customers and can ultimately lead to a loss in sales and hurt your business's bottom line. So, many NFT businesses currently may not be collecting sales taxes due to, customers' demands for anonymity, and therefore they're not collecting the required information to do so. Maybe the compliance needs are too burdensome currently because you haven't found a technical solution, or maybe you're just unaware of the requirement for you to collect and remit sales taxes. Ultimately, if you're neglecting this, it may get you through with your short-term sales and help you in producing short-term sales, but it's going to be at the expense of your long-term sales, because eventually these compliance requirements are going to come around and they're going to have to be answered to by your company. And you want to be on the right side of this when that time comes. Now, in addition to these just base level damages to your reputation, you also may increase your level of audit risk if you're not compliant with sales taxes, and you may also have licenses within the states that you're not compliant revoked due to the fact that you're not collecting sales taxes. And finally, courts can also issue injunctions on your business to stop you from conducting further business until you start to come into compliance and collect and remit your sales taxes appropriately. So from a reputational standpoint and from a business continuity standpoint, in addition to the financial perspective, there are many issues with non-compliance with NFT sales taxes that you want your company to avoid if you want to be here for the long term. NFT sellers that want to get into compliance with NFT sales tax requirements need a solution that allows them to deal with transactions on the blockchain in scale in a way that facilitates their tax compliance. This means that they need to be able to determine their customer's address and the sales tax rate that applies to them based off of their nexus and the type of NFT that they're selling at the point of sale at checkout. And then they need to collect the appropriate sales tax rate from their customer at the point of sale, at mint, at checkout, in the native cryptocurrency. And then on the back end, they need to collect all the relevant customer information, sales information, and blockchain data in order to properly report these taxes to the applicable tax agencies and properly remit the sales tax payments to these agencies. This solution, due to the level of volume that you're selling NFTs or that your company is selling NFTs, you need an automated solution, and that's where Digital Impost comes in. Me and my team have built Digital Impost to automate the entire NFT sales tax lifecycle from checkout to reporting. So we automate collecting your customer's initial information, determining their sales tax rate in real time at checkout, and then we do this in your native cryptocurrency so you can collect the sales tax at mint or at checkout in the same moment when your customer is paying you in the native cryptocurrency that you're using on your respective platform. Then on the back end, Digital Impost handles all of the data collection, so you have what you need for tax reporting, and then we actually automate that tax reporting to the applicable state tax agencies based off of your filing needs. So NFT sellers need to get into compliance with NFT sales taxes, and they need to automate this process to ensure accuracy and consistency in their tax filing.